Hey guys, welcome back for another portfolio unveil. So spring break is coming up. I'm about to go on vacation in a week to Taiwan. So I want to really make this video just in case by the time I go on vacation that I won't be able to make a video until I get back. All right. So this is a special one because it could be my last video for another 2 or 3 weeks or so. So without further ado, let's get started. So today is March 8th on a Saturday, 8:17 p.m. That's when I'm recording this. And there's been some massive changes to the portfolio that I want to share with you guys. All right. So first things first, you will see that the number on my portfolio, the size of it has changed drastically. It used to be in the 190s, 180s, but now it's in the 283. This is not because I've made a massive gain since the last video. It's actually because I transferred another account over to Wealthsimple and hence the increase in portfolio. So before I just had a TFSA, non-registered, and a crypto account. Now I have those three, but also my RRSP here. All right. And I'm just going to show you a couple things that I'm doing now. So the big thesis right now in the market is tariffs. Okay. So tariffs. The market is down a ridiculous amount. If we just look at the indexes, the QQQ is down like 10%, S&P 500 is down 5%. These are massive reductions to the stock market. The stock market really doesn't like the uncertainty of Trump tariffs. Additionally, the interest rates is another thing that we have to watch for as well. Um, Jaws report just came out yesterday, and while it was optimistic, the market is struggling to recover due to the tariffs and uncertainty it brings. So you're gonna see something really crazy with my portfolio versus other videos. So if you watch back to my other videos, you always see that my portfolio was up $25,000. Look just how bad my portfolio now is with the Trump tariffs. Okay, so I have nothing to hide. Everything that I'm going through, I'm just gonna show you. Right? We've I've made videos when times are great, and now I'm gonna be making videos when times are tough. All right. So in the previous videos, I was up 20,000, 25,000, $20,000, $25,000. Now we're actually down all time. That's how crazy it is. That's how much we've lost. Okay, because even though, despite the fact that S&P is down 5%, QQ is down more, if you look at my portfolio, I do a lot of individual stocks, and that's why it's down so much, right? For example, if you look at certain stocks, Palantir is down over 30%. Tesla has lost all of its gains that it has incurred since Trump came into power, and also much of the gains that it received from the earnings back in October, November, when the stock price just shot way up. Okay, and hence that's why we see this huge drop. But what we got to do and what we got to know is that this is part of investing in stocks. Okay, last 2 years when the market has been up 30%, it's it's an easy market. Anyone investing in any stock can make money, all right? But it's times like these that prove if whether you have it or not to be a long-time investor. You got to be able to bear through the pain right now because if you could, the market is going to go much higher than it was even before this market has been crashing. And that's how you make money. So, um, I'm down by a lot. If you look at my numbers, last 3 months, I'm down by 29,000, 9% down. In the last month, I'm down 8%. But it could be a lot worse if I wasn't doing the swing trades that I'm doing. All right. So before talking about what I'm going to be doing next, given this kind of tumultuous environment, investing environment that we're in, just want to quickly show you the last of the swing trades that we've been doing. So there hasn't been much. If we look at the updates in swing trades, something that I think probably the last ones I talked about was QBTS, where we had a gain of $112. So end of February, on February 27th, we exit out of two positions. One was Archer, It wasn't a lot of money, but by February 27th, when I closed the position, the market was already going down, sinking, right? So I thought, I got out of Archer with 3% and I was good with that. And then on the same day, I also exited my Visa position. If you guys saw my previous videos, I've always been in love with Visa, extremely bullish. I had probably like I think $3,000 to $5,000 invested in Visa, and I actually wish I had a larger position. Even during like the first half of these tariffs, Visa was kind of going up while the rest of the market was going down. And so my average was originally, I think, like 287, but because I increased my position a couple $1,000 up to like $5,000 or $6,000 or something like that, my average in the end was probably like around 297, I think. So if you look at my swing journal trade on right over here, yeah, so 297 was the price that I bought in with an average cost for Visa, and I sold at 358. And sure enough, and we made a $651 profit, which was a 90% gain on our money. All right. And sure enough, it was just the right move. I really didn't want to sell out of Visa, but since we sold out at 358, look what happened to Visa. So Visa has since then gone down. So it hit a high on March 2nd at 362. So I sold around here probably like this was February 28th. So I sold February 27th when it was basically growing from 355 to 362. I sold at 358. Okay. And then it went as high as 362 on February 28th, and it's been tanking since then with the rest of the market. So I'm glad that we got out of that one, okay? Even though that was a long-term gain, sometimes to make money, you're gonna have to look at the market. The market looked really volatile, so I thought it was a bit of a gamble, but it paid off, which is to sell my position, take the profits, and then wait. If I think that the price is going to go down, wait for it to go down and then re-enter. Okay, so I'm back into Visa. So let me just show you everything in my portfolios, my different accounts before we jump into Visa and everything else. So starting with the TFSA, this is the one thing I love. So, in the last few videos, when the market was going up, I've just been blasting TFSA because I say, this is the one account where I don't really make a lot of moves just because the nature of the TFSA, right? Well, actually, and I was kind of hating my Happy T, if you guys remember, because that was my 20-year treasury um, stock, right? Well, in times like these, this is the one account, my TFSA, the one that I don't touch, that's actually up. So all time, we're still up $15,000, 14% in the TFSA, whereas in comparison, the other accounts are all just down like crazy. All right. So let's just see what's happening here. So I've just been buying Ethereum, um, but in the form of a monthly dividend ETF called ETHY, which is Purpose's Ether Yield ETF, which basically tracks the price of Ethereum. So I have about a $8,500 position in this one. My average price is $3.53. And it's now down to 242 because crypto is down like crazy right now. So I'm down 31%, but again, I'm okay with that. Um, if we look at the price of Ethereum, right? If I'm at 353, that was the price when the market was around between here and here. All right. When this eventually goes back up, it'll be in the fours, high threes, fours, maybe even high fours. Okay. And next time, if it makes an all time high, maybe close to five. Right. So it's kind of like, yes, right now with the market down, there's a huge loss. As long as you feel comfortable looking at that number, that massive amount of red, it doesn't really matter. It pays steady monthly dividends every month. And when Ethereum eventually recovers and hits new all-time highs, we make a gain and we get to keep all the passive income that it's generated during that time since. Okay, so it's perfect. So Happy Tea, it's a very defensive ETF. The next one that I want to talk about, Happy Tea. So while the market is going down, Happy Tea has more or less been going up. So look at the last month, last 3 months. So yeah, 3 months ago, when the market was still up back in December and January, it dipped quite a bit. But throughout February, it's actually going up a bit. So it's actually not looking too bad. And this actually gives me a good opportunity. If Happy Tea, if the stock market does not recover before, okay, so if Happy Tea goes up while the stock market keeps going down and doesn't recover, that's a great time for me to sell out and then put that money that I used to have in Happy Tea into one of the stocks when it's at its lowest. Okay, so I have a $66,000 position in Happy Tea, right? If let's say this moves up a little more to $10 or something like that, and I'm down what $3,000, 5%, and then the market continues to go down, I might actually consider just, selling out at a loss for Happy Tea because, you have to also factor in the dividends I made. So maybe I'll calculate the numbers later. If I already made quite a bit in dividend and it breaks even if I sell at a loss right now, like at 5% or something, I would do it if the market just keeps going down. Okay? Because then when the market eventually recovers, right? We're gonna make good money as well. So that's something that I really want to work on. I don't want to be the kind of person where every time I see red, I can't handle it, and I have to wait till the screen um, before I sell out of it. That's more or less in economic terms a sunk cost fallacy, right? So I want to be flexible if that happens. But if not, if let's say Happy Tea recovers, then I'll just sell out when it breaks even and then move on. Nvidia is down by a lot. So NVHE is a monthly dividend payer that follows the price of Nvidia. So since Nvidia earnings, it's just been going down. I sold a lot of my this position during just before Nvidia earnings came out around when Nvidia was around 134. So I made a decent gain on it. Um, and I had less of a position that I do now, which is $3,000. But when Nvidia went down since, I just reinvested the money in back into Nvidia, so I lowered my average. Okay, so I do like Nvidia. Unfortunately, it's down by 8%. But actually, I really was able to lower my cost average by selling out at a peak around the earnings. And then when it dropped 10, 15, $20, I took that money and I just bought back in again. So my average is at 10.21. Currently, NVHE is at 9.31. Okay, the next two I'll talk about QQCL and USCL. QQCL follows the uh, QQQ, and wow, I'm actually down. I did not expect this. If you guys watched my last few videos, I was up 10, 15% on this one. I sold a little bit out of my QQCL to fund my Ethereum, the ETH1 that I talked about earlier, as well as USCL. Let's see if USCL is down. Okay, so see USCL, the S&P is only down 5%, so I'm actually still up by a bit, 4%. And I trimmed this position also to fund my Ethereum as well, just because I liked Ethereum. RS, man, this is the biggest killer. It just keeps going down. I bought it at a pretty good price because, if you look at a year ago or 2 years ago, if RS really, went from, 18s down to 17s. And I saw a lot of people online buying this in the 17s, 16s, 15, 14s, right? So me buying it back in November, I thought I had a good deal at 12, 16, but it just continues to go down. Which is why this is probably the only one in my portfolio which I just want to get out of. But we're gonna wait. Okay. I'm still looking at the market and I'm trying to react to see when's a good time. UTES, this is another one. This is the second one that I want to get out of, but it's not as pressing as RS, because I feel like UTES doesn't drop and depreciate as fast as RS. So for UTES, I think as long as like it keeps going up like this, like it has in the last week, um, up to a month, I'll get out when it's comfortable. To be honest, I think now that I'm down just $607, I might actually be able to get out with all the dividends that I earn, maybe break even, but I don't know if I want to do that. YTSL. So this is the one that follows Tesla, the ETF that follows Tesla, and it pays monthly dividends. And this might be this might be a shocker for you guys, but every time I showed my past videos, you guys always saw my YTSL at a massive gain. It was always this like baby that I was holding, this shiny baby that I had. It's like gold basically. Even so, this shows how sad this Trump tariff market has been. Even with this shiny gold, it has turned into a dud. So um, as Tesla has been dropping quite a bit recently, I'm starting a new position in this, and I'm actually down 15%, which is ridiculous. But that's how much Tesla has dropped since then. So if you look at the height of my YTSL, I was up 99%. I was literally up 1% away from 100% gain. Didn't sell because I was just manage this passively, and then look at it now. It's down 15%. That's crazy. All right. I don't want this video to go for too long, so I just want to actually just jump quickly to the main thing I want to talk about right now. So in a market like this, um, I'm always looking for new ways to make money, even in a market like this. So I think right now, the best thing that you should do is, aside from just holding the stocks, and hoping that you finally eventually drop this bag that you're holding. The best thing to do right now is to earn passive income while you wait for the market to recover. Okay. I believe if you look at what's going on right now, if you solely believe your thesis is that because of these Trump tariffs, the market is going to keep going down and it's never going to recover and it's going to go to zero for some reason, maybe, and if that's your thesis, maybe you should, based on that, take your money out. But my thesis is different. I believe this is very short term. Why? Because look at my background. I have a business background. Okay. So when I look at what Trump is doing, it makes sense to me, right? Without making this video political, we've had the previous couple of US presidents come in where think they've done some things to make the economy better in their eyes, but I think overall, was losing its competitiveness to its competitors like China, Europe, the rest of the world in some aspects. Okay, I'm not saying all, but I think just like Trump was saying, like I think definitely um, around the COVID time, I don't think US was at its top peak in power. So I think regardless of what you think about Trump, I believe that Trump is a business person and he believes that, to improve the US, it's to improve the economy. And with some of the damage that's been done to the economy, there has to be some short-term pain in order to have long-term gain. Okay. So it's kind of like ripping off the band-aid really, really quickly. So we're gonna get some pain in the short term, but I believe that in the long term, it's gonna make benefit. Um, and maybe I'm wrong, but I have a business background and I see what Trump is doing, and he's just doing what most managers or people who come in as a new regime into a company do to clean house and basically rebuild that foundation for maybe like a better future, right? Now you could say that what he's doing with his negotiation tactics, using tariffs, using fentanyl, is stupid. He's going back on his word. That might be a sign of weakness, but that's great. I mean, maybe I agree, maybe I don't, but that doesn't really matter. My point is, what do I see at the end of that? I think we're gonna get out of this phase, and it's gonna be even better. And that's why I was willing to let my portfolio go from $25,000 up to now 1% down all time and $4,000, less than when I first got into Wealthsimple. Okay, because I believe when this market turns around again, we're gonna make some new all-time highs. Okay, and that was always my target. My target is not to be a trader forever. In this kind of market that I see we're in, it's better to be a long-term investor plus moving into options to make some passive income on the side. So it's kind of like we're playing tennis. We're playing offensively right now, and now the opponent has switched tactics, putting pressure on us. We've lost momentum, and we've got to switch. And now I'm moving into a more defensive stance, and that's what I'm doing right now. So I'm holding my positions, and I really want to show you guys cover calls. Okay, so in the last few videos, I told you I couldn't really sell cover calls because of the accounts that I have I have non-registered accounts, and we're currently on Wealthsimple. Non-eligible accounts cannot sell cover calls. But now with my RRSP now also on Wealthsimple, I was able to show you to do a couple cover calls, and this past week, and it went very well. So I wanted to show you a couple. So uh, two cover calls that I worked on was Archer Aviation and also QBTS. Okay, so let's look at Archer Aviation first, if I can. Let's see, ACHR. Okay, so last week I sold a cover call of Archer at $10. Okay, so just and you can see what I'm doing and what the strategy is and what is a cover call. So cover call is basically you're selling the opportunity for someone who's going to buy your cover call to basically buy your stocks at a certain price in the future. Okay. Why would they want to do that? Well, if right now um the price is at, let's say, 10, but there's a cover call available for 15, and you think that in the time period that we have, before this option expires, that seller believes that, that buyer believes that, you know, it's going to go from 10 to 15, but even higher, $20, right? If you buy the opportunity to buy shares at 15, and then price goes to 20 on that exact same time that you predict it's going to happen to, you can buy at 15, and then you can automatically sell to the market and make a gain. So therefore, options have value because you're buying into the stock at a lower price. Okay. But that's not what we're doing here. We're selling cover calls. I'm just saying, why would someone want to buy that? Because you're creating value for someone in the market, whoever it is. So we're selling cover calls because if you do options, which I did before, if you buy a short-term option, there's a lot of risk. Okay, time is not on your side, even when you guess the price right. So I don't want to do that. I want us to do safe plays right now. Selling cover call is more safe. Okay, so look at this Archer option cover call that I was selling. So basically, I bought this on February 28th, and the time frame I chose was March 7th. But so basically, what I'm saying is, does anybody in the market want to, take the opportunity to buy Archer at $10 on March 7th? Okay. At the time I bought this, so actually, just some context. My RSP was actually managed by someone else in the family before this. And so when I kind of transferred over to Wealthsimple for me to manage recently, I saw that they bought it at a $9.92 cost. That's why I'm selling at 10. Okay. Because I believe if you sell it at below 9.92, 8 or 7, if this option goes through and someone wants to buy at $8 or $7, I'm selling it at a loss, which I don't want to do. So I chose 10 because even if, let's say, it gets exercised, like the options someone chose to buy those shares on that day, um, I'm not selling it at a loss. I'm selling it at a small gain, the 8% per each share that I'm selling, right? And then whatever premium I earn is going to be on top of that. Okay. So I sold Archer calls at $10 on March 7th. Only one contract, so I only got $15 from that. It dropped to 14.25, as you can see here, because that's the cost of selling an option on Wealthsimple. So that was money gained by Wealthsimple. And then a week later, yesterday, that stock or that option, that cover call expired, and Archer was at, drum roll, $7.52. So, which basically made that option worthless because opportunity was for the buyer of my cover call to buy at $10. But if Archer's at 7, then you're buying at a higher price. Therefore, it didn't get exercised. So I got to keep my shares. I never had to sell to anyone, and I earned free $15. That's called passive income. That's great. I was playing it very safely with just 100 shares, because actually, based on my Archer position, I could have sold 300 shares. I could have sold 3 contracts, each contract with 100 shares, right? But I just sold one just to test things. I never done, a cover call on Wealthsimple before. So I just tried one to see how it works, to make sure that, Wealthsimple wasn't going to glitch and, screw me over or something. So that went through. The other one, there was absolutely no loss in doing this Archer one. The other one that I did for cover call was QBTS. Okay, so let's look at QBTS to show you the story about that one. So the time frame was the same. On the same day I sold the cover call for Archer. I sold it for, oh, maybe that's not true. Let me have a look. Um, okay, so that's not true. Sorry, not the same day as Archer. It was a couple of days later. On March 4th, that's when I sold the QBTS one. I bought QBTS at, what was the price? Let me see. I bought QBTS at $4.80. No, that's the wrong one. See, because this is RSP that I sold the cover call, and it says here I bought in my non-registered. So actually, it would be this one, RSP. Bought it at 4.75, and basically I was selling $5 calls. So I would make the money of, on March 7th, I will make the money if, let's say, it got exercised, okay? I will make the money of the gain from $4.75 to $5. But after that, that money goes to whoever bought my option, okay? So unfortunately, QBTS, I love this stock. It moves really, really well. It went over $5. Okay. But I collected premium of $25. Okay. And also I made the move from 475 to five. And that was another $25. So I basically made $50 minus the 75 cents that I lost for, you know, for the transaction fee. If and let's see what QBTS sold for. QBTS ended on Friday at 520. So whoever bought that option made money because they it was in the money basically, right? They It closed at 520. They bought my shares at $5, so they made 20 cents for buying it. So they made a little bit of money. But the thing is, I did the calculations, and even if I held QBTS till 520 and I sold on Friday, the gain was actually $7 less than selling this cover call, and just taking the gain from 475 to 5. Okay. Now, I'm not gloating here. I'm not trying to be overconfident. I think next time I got to be a little more careful. I think QBTS, it's going to move really well, especially when I bought at the price that I did, 475. Did I, if my plan was not to, sell my shares at all, I probably, should be careful not just predicting that it wouldn't go up to $5 because at $5, there's a fair chance that some QTS would end that time period above that number, and then I would have lost my shares. Okay, so now I lost my QBTS, but at least I made some money. Okay, so now that I saw that it worked really well, I am doing some more cover calls. So my current play right now is on AMD. So if you look at my AMD, I have AMD at 108. Okay, so I sold 109 calls. It's gonna expire next Friday, March 14th. And basically, by selling one contract of AMD, I earned a premium of $25. Okay. So if by next Friday, AMD does not get to 109, this option will not exercise. And I just get to keep my shares and I keep that $25 and it's free money. That's what I want. That's what I'm doing right now during this bad market. And that's what I want you guys to figure out and maybe figure out whether that's something you want to do as well while we wait for this market to get better because you're making money on the side essentially. All right. So yeah, that's it for this video. I just wanted to show you some of the cover call plays that I'm playing. If there is any interest, I may make individual videos, not on sharing updates on my portfolio, but just talking about options if people are interested in that, because I am fairly knowledgeable about that as well, and that's why I have the confidence to take this sum of money and be able to sell cover calls on the market and still feel confident and make these profits that you're seeing here. So if you're interested in learning from, options from me, I can make it very, very simple for you to understand and then figure out what it is. And then you can decide on your own whether that's something that you want to pursue. But yeah, I think I'll end it over there. There's a bunch of, you know, stuff I haven't really had a chance to get through, but more or less you can see that I have the same stocks as previously. I just quickly go over the stocks that's kind of new. BBAI, I'm kind of back in because the price has dropped so much at 428, and then it's down some more. But when the market recovers, I think I'm fine. I really reduced my Google because I really don't like the long term. There's some additional uncertainty versus when I had that huge Google position you saw before. So I moved a lot of my Google into Amazon. So I have a huge Amazon position now at $6,400. Okay, it's down 12%, but that's just because the market is down. When it recovers again, I'm a little more confident with Amazon versus Google. I may use the next video to talk about why, just because this video has been going for too long. But other than that, I'm back into Palantir, and I'm already up 10%. I just bought this a couple days ago, so that's a small victory. Um, Despite this, pool of red. And then lastly, just because I talked about Visa, I sold out at 358 and I bought back in at an average price of 346. Okay, and I'm good with that. It's not too bad. All right, so that's it for this portfolio update video. Um, I'm glad you guys are enjoying the content. Again, if you're interested in joining the Discord, that's where I spend most of my time in. So I'm basically this is where I'm doing my swing trades. But like I said, recently the swing it's not the best market for swings because the whole market's going down. But you will have access to the premium content that I'm talking about with my members about the market, what's happening, learning as we go, experience these new types of conditions that we're in, and also the cover calls that I'll be exercising as I do it live. So as soon as I do a play for cover calls, I'll alert it to my Discord. If you're interested in that, definitely you can look into joining the Discord. That's it for this video. Thank you for taking the time to listen and watch the update. Please hit like um, and subscribe if you love the content. It helps you, get updates for the next time I come out with a portfolio. And for me, it just gives me motivation that people enjoy my content. And that's really the main reward that I want from all this, since, my videos, my channel is too small to make any money from this, but I do it because, there is a crowd that watches. So definitely the like and the subscribe will help. And that's it. Have a good week, and I'll see you back after my vacation.